Welcome back to FundaTech Insights, the show that explains Wall Street without requiring a financial therapist. Today, we're diving into Enviri Corporation, ticker NVRI. And trust me, this stock has more plot twists than a prestige TV finale. Joining me is our guest, Maddie, who reads earnings reports the way normal people read beach novels.
Happy to be here, and yes, I do consider footnotes a form of entertainment. So, Enviri Corporation, trading on the NYSE under NVRI, operates in the industrial environmental services sector. The company includes three main segments: Clean Earth, which handles specialty waste and recycling; Harsco Environmental, focused on on-site industrial environmental services; and Harsco Rail, which manufactures and services rail equipment. Think of them as the Avengers of waste, cleanup, and trains, only with fewer capes and way more spreadsheets.
Honestly, if they want to expand into cleaning my garage, I'll personally file a bullish rating. Okay, now let's talk market performance. What's the stock been up to lately?
As of the latest trading snapshot, the stock is trading around $17.40, up roughly 28% on the day, with a market cap hovering near $1.4 billion. Trading volume has been running hotter than usual, thanks to some major news hitting the wires. So yes, the stock woke up and chose price discovery, which is the polite version of chaos.
If I could gain 28% just by announcing I'm making changes in my life, I'd be unstoppable. Speaking of changes, what's the big news everyone's buzzing about?
The blockbuster headline is that Enviri announced a $3.04 billion deal to sell its Clean Earth division to Valeo.
Oh, really?
Shareholders are expected to receive between $14.50 and $16.50 in cash per share once the deal closes. After that, the remaining businesses, Harsco Environmental and Harsco Rail, will spin off into a new standalone company called New Enviri, likely sometime in mid-2026, assuming approvals stay on track.
So to summarize, sell a massive business, hand shareholders a stack of cash, then reinvent yourself. It's basically the corporate equivalent of a breakup haircut.
Pretty much. And to add context, their Q3 2025 earnings showed revenue of $575 million and adjusted EBITDA of $74 million. They're still posting a net loss, but Clean Earth was the strong performer while the rail segment continued to drag.
So losing money, but at least the good-looking sibling is thriving. So where does that leave the financial outlook?
Management did lower full-year guidance due to the weaker rail performance. However, the sale dramatically reshapes the balance sheet, unlocking value and improving leverage. Shareholders get both meaningful cash and shares in the new company, which feels like a two-for-one deal, just without the shady promo code.
If finance were more like retail, I'd probably own real estate by now. Let's get nerdy for a second. What are the charts saying?
Technically, the stock is trading above both the 50-day and 200-day moving averages, which signals bullish momentum. The stock opens with the huge 35% gap, which indicates the bullish momentum.
Oh, that's good. Can you please tell us, our viewers, about support and resistance, and also the important levels to watch?
Yes, why not? Support levels are sitting around the $12 to $14 range, where the stock given the breakout of the cup and handle pattern, while the next resistance appears between $18 and $20, especially after the deal-driven breakout. But as always, price action doesn't care about human emotions.
What are analysts saying? Are they impressed or playing hard to get?
Wall Street is currently neutral to cautiously bullish. Price targets sit in a broad range from roughly $12 up to $24. But most firms are holding off on updates until the Valeo deal progresses. Coverage isn't as deep as the big caps, so rating shifts may come all at once the dust settles.
So analysts are basically saying, we like you, but we're not ready to meet your parents. And finally, what's the vibe on social sentiment and short interest?
Now this is where things get interesting. Short interest sits around 12 to 15% of the float, with days to cover estimated between 8 and 14. That's a sizable setup, meaning that if buying pressure spikes again, there's at least the potential for a short squeeze. Not guaranteed, but definitely something traders are watching closely.
Ooh, really?
Retail chatter picked up fast after the sale announcement, and momentum names plus elevated short positioning can create some wild swings.
So it's basically the stock market version of shaking a soda can and hoping it doesn't explode in your face. All right, now it's bottom line time. What should listeners take away?
The opportunity here is that shareholders stand to receive substantial cash from the sale, and new Enviri could re-rate with a cleaner balance sheet and narrower operational focus. The risks include deal timing and approvals, continued weakness in the rail segment, and the possibility of increased volatility due to that elevated short interest.
So, in other words, interesting, but maybe don't bet the house. Unless the house is imaginary, in which case, live boldly. All right, that's all for today's episode of FundaTech Insights. Remember, folks, this isn't financial advice, just mildly market therapy. Catch us in the next episode when Maddie explains about the next stock. Till then, take care of yourself, bye-bye, and keep investing.